Hello traders, Nick Shaheen here looking at AMD. Okay, so this is the 20th inauguration day and markets are going bonkers. And let's see here, AMD is a little bit down. Not sure if the whole sector is down or just them. No, Nvidia is up and Intel is up. So AMD is having some sort of an issue. All right, so this is a daily chart, about a year's worth of data. And it's based on yesterday's candle. It fell into a pivot zone, meaning this was a line they fought over a long time. I would argue back in August of last year, they started to fight. Failed 3 times, and then the 4th time they burst above it, and then they've tested it for support since. I don't want to call it broken support, but technically now the bulls have to retake the momentum. The good thing is, if you follow the ascending channel, this is just a linear regression. I don't draw it, it's automatically drawn. It tells you, okay, so maybe they stay within it and they revert to the mean, which is higher. So if I'm long, I'm not panicking out. Especially that I think 80 to 84 is good support, and if it ever falls to 76, it'll be, or anywhere in here, it'll be awesome support. I don't like these. Don't know what happened over this earnings, but it was great news apparently. But I don't like ledges this obvious and frothy. I don't want to call it frothy. Machines, markets need to trade through these. It's like a hole in volume, and they want to fill it. They don't like jaggedy volume profiles like this. So these are my notes. I haven't looked at them in a while. Let me see. Open air above there. They didn't go. Downside potential, they haven't triggered yet. It is support, but it could fail, and if it does, major support down here, so it's not a big deal. See, like this little jag worked out, this didn't. So I'm going to take this out because it's just visual noise. It didn't work out. This is an area of interest, and this was a target at one point from a cup and handle. So you can see how if it ever falls into here, I'll be selling puts. Can you believe it? I'm going to tell you a story. During the pandemic crash, I sold puts at $20 for AMD, and I collected over $2 for them. Can you believe somebody bought protection at $20 and paid $2.20 for them? I did it twice, one for October and one for July. I'm saying this because if I don't make notes to myself, then I don't know what to do under pressure. Like on a day when markets were falling 5 or 6%, then I'm not panicking. I read my notes and I remember, okay, this was my plan, and now I should be cool and calm and collected, versus, oh my God, I need to buy protection at all costs. So basically, those people that bought $20 puts, they would break even under $18. So AMD would have had to fall to $18 or lower for them to actually make money on or be protected, because it was just insanity. Anyway, but that's what happens during panic. So this is a good company. It's not cheap by any means. It's cheaper than Nvidia per my standards. I know somebody's going to say, oh no, it's not. It has a 3-digit PE versus Nvidia's PE is like 70 or whatever. I'm speaking from memory. We'll check in a second. But my point is, it's not the PE that is more important here, because they're both growth companies, right? So why am I asking them to be profitable? If Amazon listened to everybody that complained for 10 years, hey, you need to be profitable, stop spending money, we would not have had the cloud. The AWS came because Amazon spent a lot of money, right? So PE of 120 for AMD doesn't scare me. This is the important part right here. The price to sales, it's 12.5. It's not outrageous. It's not very cheap, but it's not outrageous. It's almost twice as cheap as Nvidia. So what does that mean? If I'm buying the shares today, I'm giving them credit for 12.5 years worth of full year current sales, versus Nvidia, it's twice, 24 or 25 years. Let's double check. So from my perspective, I would rather overpay on the profitability, like I don't care about profitability, and not overpay on froth, 22 versus 12, so 10 points higher. Yeah, that's a big difference. For relativity, Amazon's is 4.5. That's how cheap Amazon is. What did you say? Amazon is cheap? Yes, it's only got 4.5 years worth of sales in it. So if you owned a pizza store and you were very successful, and somebody said, hey, I want to buy your store, let me pay you 4 years worth of sales, would you sell it? Sales, not profits. Of course you wouldn't sell it. It's too cheap. You would sell it if the business is struggling. They just gave you 4 years worth of sales. Get the heck out and find something else. So, but in this case, they're booming, and management is good. The only caveat is management is too good per Wall Street standards. Like Lisa Su can walk on water. What if she leaves? Well, she's not going to leave. I don't know that. Steve Jobs didn't plan on leaving, right? So you know what happens. I like the company. I like buying dips. This is a buyable dip if you believe that it's going to trade the channel up. I would rather sell put spreads to, quote, buy the dip, or sell puts to buy the dip if I want to own shares. If I buy calls or call spreads, I would buy them out in time. So I would at least encompass the earnings. I don't like to sell risk into earnings because I don't have an edge. Not even Lisa Su can tell us, the CEO can tell us if her stock is going to trade up or down based on the results, and she knows what they are. So we don't know what they're expecting, right? So like Netflix up 20% or whatever it is, nobody expected that because the expectations were not that big, and they came out and they changed the expectation. So we don't know what they're going to say, and more importantly, we don't know how people are going to react to it. I've seen great reports get sold down 20% and crappy reports get blown up 10%. So we don't know. However, I would buy the dip if it happens. I would buy debit calls, maybe $10 wide, somewhere around 94 to capture a swing back up to 100. And that's how I would do it. But I prefer selling risk, and hopefully on bad days. Like if we have a bad day in the market are at all-time high. Everything. They're rotating out of the small caps today into the giga caps because everybody remembered, hey, those are great companies. Netflix just told us. Yeah, so don't be a sheeple. Don't follow the herd. Try to find good deals. Yeah. What is a good deal? I don't know. Something boring, even. Like I'm using this as an illustration. So here's a company that fell into prior support. It shed all this froth already. So it's bottomed. It's a process. So if I wanted to get long KO, this is the time to get long KO. I mean, this is a boring company, and it's definitely, if you're doing it through options, it's not that exciting. But this is the concept. I don't get long it up here hoping for a rally. I like to get long based on enough people are scared, it hit levels that mean something, let's try it. In this case, it hit level that means something, but I'm more scared about the whole market. If the whole market falls, nothing is going to hold up. Not the best of situations are not going to hold up. So there is extrinsic risk as well. All right, so this is enough about that one. If you don't yet, if you haven't yet subscribed to the channel, the YouTube channel, it's free. Do it and check the alert in case I post videos so you know right away. And if you want to try the chat room where we discuss this stuff all day, two-way, with over 240 people, 250 people and growing, all styles in there, you can try it out. There's a link in the description. It is a PayPal link. It's not free to be in the chat room. It's free for 10 days to try it out. The PayPal transaction is for $0. I don't take anything up front. I just need to know that it's a real person, not meaning us harm. I need to protect my community. That's the only way to do it. I don't collect your data. I don't do anything. It's all on PayPal. All right, Nick signing out.